Good afternoon. This is Tom Alexander. It is Sunday, January 30th. It's about 12:50 p.m. Eastern Time in beautiful Charleston, South Carolina, where we have another bitterly cold day. We don't like this. Cold is a relative term. It's about 50 degrees here. I'm sure a lot of you across the U.S. as well as Europe laugh at that, but that's why I'm all layered up here. Okay, back to the topic at hand. By the way, if you would subscribe to my YouTube channel, that would be helpful. If you find this useful, if you would like it, I would appreciate it. Okay, back to the markets. Okay, the markets have done so far pretty much what I had envisioned them doing in last weekend's report. We had the dramatic follow through to the downside on Monday, a dramatic reversal, and now we have formed balance areas, the break of which are going to be very telling. Let me share my screen. Okay, so you can see on my screen now all four of the primary US trading indices, and you can see the dramatic rally that we had on Friday. There's a lot of information here. Here's the bottom line, and this is what I put in the written report. If we really should not retrace much more deeply than 50% into Friday's range. There's no magic to that. That's just a general guideline. Friday was a day of conviction. For those of you that are steeped in auction market principles, you understand what I'm saying. We should have immediate follow through to the upside to one degree or another. So let's go through each one. We'll look at the bar charts, then we're going to take a look at the profile charts, then we'll get into the technical situation of the market. So if we look at the SPX, these are the cash charts. I think the cash levels are the more important levels on an intermediate, day-to-day basis. And the next level above here, you have this. I'm going to fine tune this a little bit. I think really you have two levels in the S&P. One would be up here in the upper 4,500s to low 4,600s. And then the immediate level is right in here. And the reason this is important is because this is a level from where we really broke down. That was, I can assure you, this was a level on everybody's radar screen. We broke down through this with conviction. Now, above Wednesday's high, you're in an elevator shaft back to the upside. That leaves, if you start trading in this area, that opens up its entire range. Now where we go or don't go is out of my depth. This is a potential area to see some sort of stopping price if we do have a really strong day on Monday, which frankly would fit with a bullish scenario, and I wouldn't be surprised. We may reach up into this 45.80, 46.10 area by Wednesday, Tuesday or Wednesday. So we'll see. And what happens this week is going to be really important in terms of gauging the type of market we're in. Are we still in a bull market, or are we in one of these bear markets similar to March of 2020, where you get all these extreme readings and you just all the downside extreme readings get immediately retraced, and you have more extreme readings on and on and on. We don't know that yet. Okay, here is the NQ. You have a similar look to the NQ as you do the ES, which makes sense. They're pretty highly correlated. You have the same handful of stocks that drive both indices, even more so in the NQ. This is Wednesday's high. The NQ needs to take this level out pretty quickly. This is a little bit of a divergence that needs to be monitored. The YM is on the cusp of taking out Wednesday's high. It's showing the most relative strength, and above about Wednesday's high, really you're looking at maybe this level up in here. And then, of course, our friend, Mr. Russell, that tends to go its own way. You know what? I have a mix of charts here for some reason that I don't. Let me start this thing over, because I'm using cash charts. Okay, this is better. These are all cash market charts. These levels are the levels that are in the report. These levels are accurate. Now, so I'm going to stop it here so you can digest this, but these are in the report. You can click on that chart and expand it. But let's talk about the Russell here. Now the Russell has this buying tail that formed. The Russell went to a lower low, and it went to a lower low on less downside momentum. The Russell tends to be more highly correlated with breadth in general, which we'll talk about in a minute. So if the Russell were to reach this level up here, we'd be talking about a gain of, from here just into this balance area, of almost 4%. Well, if the Russell moves 4%, the other indices are going to move up too. Now, are they going to move 4%? I don't know, and that's something that we will be watching. But again, the level to keep an eye on, if the market is as bullish as I think it could be in the short term, we really should not see a retracement more than halfway into Friday's range. And I, frankly, I wouldn't be too surprised to see a gap up in Globex. So I'll be watching Globex closely. We'll see what happens there. Okay, let's look at the profile view. If I can find the profile view, here we go. All right, now I put these charts, and this is a good exercise. You know, if you understand the auction process, when a market, and we had a remarkable, and I'm going to talk about that in the next discussion, the technical discussion. We had a remarkable decline into Monday's low. It was unlikely that we were going to go lower at that, especially at that rate of change. So at a minimum, you didn't want to be pressing the short side. If you are a comfortable and facile auction market trader, it was an incredible opportunity because the odds were overwhelming. You were going to get a bounce sooner rather than later. So what we have now is that bounce occurring. And also what we have, let me unfreeze this. And split it back out. And also what we have now is a strong bar of conviction. Now, is this short covering? Could be, but I don't really care the why. What I care about right now is what follows through. So I have an assumption, I have a bullish working assumption, as long as the midpoint of this range holds. Would not be surprised to see this market trade higher. And I sort of drew a schematic in the report of the shape that I think the auction would take. And I encourage you to go look at that. And I also encourage you to look at the schematic that I put in last weekend's report, because it's pretty much playing out as one might have logically posited it might. Now, the degree to which the information that I'm giving you now is tradable depends on your understanding of auction market concept, your trade plan, et cetera. But the main purpose of these reports is to show you the incredible consistency and robustness of a model, of an underlying analytical model based on auction market principles. Because and that's why I put the reports, a link to past reports, the immediate 4 or 5 weeks reports are in there. And I encourage those of you that are serious about this stuff to go back and look at this and to begin to see in your own mind if this is something that has value in your trading, because I certainly find it to be extraordinarily valuable. I know a lot of people that do. Now, maybe you don't, but the information is there for you to take a look at and for you to follow going forward. Okay, let's look at the Russell. Russell has a little bit different structure. And here's the structure in the Russell. This is a potential buying tail, and under a bullish scenario, this is a level that should be seen at a minimum. NDX, very similar structural picture as the ES, still need to get above Wednesday's high. And then if we trade higher, we'll sort of look at everything and see how the dots are connecting. And then let's see, I don't think I looked at the S&P cash. Let's find that. Okay. And here's the S&P. You know, we're already bumping up against Wednesday's high. If we get above here, you're in an elevator shaft to the upside, and then we'll start to, you can look at the upper levels in the report. But this is the midpoint of Friday's range. I'll be nervous if we start trading below that. And if we close below it by all four of the indices, it's probably immediately bearish. Okay, let's take a look at the technical situation here that we look at every week and try to keep updated. That's VIX. Oh, while we're on here, I'll make a comment about VIX. VIX reached a level you can see right here, right around 39 at its peak, that was consistent with lows in the bull trend, actually in any bull trend, but especially since the March 2020 low. Now, the caveat here is that this is an eerily similar look. We came down, high VIX here, now we form this level. Now, if you go over here back to March 2020, VIX reached somewhere around the high 30s, low 40s here, got the bounce that one would typically expect, and then the market just absolutely cratered. So that's why it's going to be really interesting to see how the market behaves now under a similar set of technical extremes that we saw in what turned out to be just the beginning of sort of a crash. So unless we're going to crash here, I think the odds favor further rally next week. But you always have to say, okay, what invalidates my thesis? Well, my thesis is bullish. So if we begin trading halfway below the ranges established on Friday, I have to be careful with my trading being bullish. Okay, let's look at this. All right, the 10-day moving average of advancing issues is as extreme as it gets most of the time. Now, in March of 2020, again, that was the outlier example. Unless we're going to do a March of 2020, this is suggestive that this market reached an extreme and we should bounce some. Also, and let me see read my comments in the report here so it's accurate. Tuesday completed a series of 8 consecutive lower daily highs, and Thursday completed a series of 11 consecutive days of negative breadth. I read that right off the report that you all have. Both series were more extreme than any during the March 2020 decline. So this has reached a technical extreme. It can get more extreme. Extreme is a relative term. It's like cold. Cold is a relative term. Now, breadth finally had a positive up day, but in bigger picture terms, this is not that big a deal, plus 1400. I would not be surprised, and if my short-term bullish thesis is correct, we should see a very significant expansion in breadth beyond this, see something around plus 1800, plus 2000 closing basis. At that point, it will be very interesting to see where the market trades, where price reaches if we get one of those days. So guys, that's pretty much it in a nutshell for this week. Enjoy the remainder of your weekend and your day. We'll see what happens in Globex tonight at 6 p.m. Eastern time. Have a great week.